Hey guys, Paul Lynn here talking to you a little bit more about some trading and investing. Something that I've mentioned already in a couple of these videos was day trading. And I've gotten a couple of questions about what's the difference between trading and day trading. And so I wanted to go into a little bit of depth about that and also tell you how it relates to different brokerage firms, all right? So, there is a regulatory body called FINRA that establishes rules for brokerage firms, and while they don't necessarily have authority over them to penalize them and things like that, they do still carry weight, so people generally tend to follow their guidelines. And one of their guidelines is the PDT, or pattern day trading rule. So think about it as, without going into just a whole bunch of useless information, once upon a time in the year 2000, there was a big tech bubble. Everyone was buying .com stocks like crazy, and then all of a sudden that stuff kind of popped, and everyone realized, oh my God, we've been overvaluing these stocks, and this stock is trading for a value of billions of dollars when it's only worth millions of dollars. So people started dumping all of this tech stock. It imploded overnight, and a lot of people lost a lot of money, to include brokerage firms themselves, because people were aggressively trading during the day, and by the end of the day, their accounts were sometimes very far upside down. They didn't have the money to cover their trades, and then the brokerage firms were trying to cover all of those trades and losing all of their money as well. So how that happened, you can look it up. I'm not trying to share all that in this video, but anyway, FINRA created a rule to try to prevent that from happening again. They can't really prevent the bubble and the overvaluation of stocks. Trust me, that's just par for the course. There's always going to be overvalued stocks on the market. But what they can do is try to minimize the impact to the individual trader and to the brokerage firms. So they created this rule and said, well, there's this thing called day trading, and that's when you buy a stock and sell that same stock after you bought it within the same day. All right? So if you think about it, if I buy stock in Microsoft today, and then I sell Microsoft stock tomorrow, that's not a day trade. But if I buy Microsoft stock today and I sell Microsoft stock today, that is one day trade. And if I buy 10 different stocks today and I sell 10 other stocks the same day, since it's not the same stock being bought and sold, it's not a day trade. So I can do 100 trades a day, and none of those will be day trades unless I am buying the same stock and then selling that stock later in the same day. Okay? So that's what a day trade is, buying a stock and selling it afterwards during the same trading day. Okay? So what does it matter? Why? Well, FINRA has made this rule that says if you are buying and selling stock as a day trader, then after so many day trades, if you've day traded like 3 or 4 times within a week, then I believe it's 4 times within a week, then the brokerage firm has to flag your account as a day trader. What does flagging your account mean? Good question. Really, they just have to identify you in their system as a day trader. This doesn't affect tax reporting or anything like that. Day trading is not illegal. There's nothing inherently wrong with buying and selling the same stock in a day. It's simply a matter of FINRA wants to ensure that all of these brokerage firms have identified who their own day traders are on their platform and that they know who they are. Okay? So having your account flagged as a day trader does not affect you. It does not affect them. It doesn't affect tax reporting. It's not criminal behavior. It's nothing. It's basically just hey, you've got a badge on your account that says you're a day trader. Who cares? But then FINRA says that if you're going to day trade 5 times or more, I believe it is, within a week, then you need to have a minimum balance of equity in your account of $25,000. Okay? So this is just FINRA's guidance. It says, hey, if your brokerage firm wants to allow day trading on their platform, no problem. But we recommend that they require a balance of $25,000. So maybe you say, well, I only have $500 of cash equity sitting in my account, but I own $50,000 worth of stock. Okay, then your account should be allowed to day trade because your total equity, realized, unrealized, stock, assets, cash, whatever, it all equals something greater than $25,000. So, yay, you should be allowed to day trade. That's basically how the PDT rule works. So your brokerage firm will not allow you to execute too many day trades within the same week if your account has less than $25,000 worth of equity. What does that mean to you? It means that you should probably do what I do and treat day trades kind of like extra lives on a video game. You know, you're playing a video game at the arcade or something, and one of those classic kind of retro games where you have 3 lives, right? Well, the idea isn't to die as many times as you can. The idea is to play with 1 life as long as you can, and then when you die, well, you've got some more, lives in the bank. Same thing with day trades. If you're on a platform that allows day trading and you've got the equity requirement met, then by all means, day trade like crazy. You have unlimited extra lives, right? Just like you put in a cheat code. Because I use eToro, eToro seems to hate traders. All right? They like investors. They're not real fond of traders. So they say, oh, well, because of FINRA, we don't allow day trading on our platform. Okay, but according to FINRA, once I've got $25,000 worth of equity in my account, then I can day trade, right? Well, no, we still won't allow you to day trade because you're a dirty trader and we don't like that. Oh, wow. Thanks, guys. So eToro, free trades of stock, that's good. They do not allow day trading whatsoever, even if you meet the FINRA requirement for equity in your account. So uncool, eToro, uncool, boo. But that being said, it's still worth my time to be on the platform. So, I do intraday trading. I buy today and I sell tomorrow or the next day. That being said, sometimes there are those opportunities where you've just got to sell that thing today because it bounced real good. That stock is up and it's going to fall and it's going to stay down when it does. And you're just like, oh no, I bought it today and I got to sell it today too. Well, on my platform, you've got 3 of those within a week. And then, it resets. So if I do my first day trade on Monday, my second day trade on Tuesday, and my third day trade on Wednesday, I cannot day trade anymore until the following Monday. And then it's been a week since that one falls off my account. And so now I can execute 1 more day trade. And then Tuesday I have 1 more. And then Wednesday I have 1 more, right? So that's kind of how to play it. Keep those day trades in your pocket. If your brokerage firm does not allow active day trading for your account, or in general, like eToro, keep those day trades in your pocket for when you need them. Don't get greedy and execute a day trade just to make 2 or 3% or something like that. Save those for when something's bouncing and it's up like, something stupid crazy like, 10, 11, 12%, something like that. And then you're like, oh, baby, I just gotta. And then burn that day trade and burn 2 or 3 of them if you've got to. But, make sure that if you only have 2 or 3 day trades per week, make sure that you're keeping those and using them when you need them. Because there's nothing worse in the world, and I've been in this position before, nothing worse in the world than you see your opportunity and it's big and, there's a significant amount of money there and you can't sell your stock. And then by the time the next day rolls around and you can sell your stock, it's down and it never goes back up to where it was. Been there, done that. Bought the t-shirt. Don't recommend you be in that position. So that is what day trading is. Those are the limitations on day trading. As far as your specific brokerage firm that you're using, don't ask me what their rules are, because I assure you, I do not work for that firm. I have not memorized their rules, nor am I going to Google it and look it up for you. It's your firm. You talk to them, or you go to their website. You see what their rules are on PDT or pattern day trading. That's up to you. But now you know about it. That makes you a smarter trader. That's going to help you make some money and know how to circumnavigate those limitations where applicable. Hey, if you like what I'm doing, subscribe, get some more of this. Otherwise, I tell you what, that day trading stuff, that is all I've got for you today. Want to thank you for watching. I do hope you use this to put some more money in your bank account. I want that for you. Thanks again, and I'll be seeing you.